Market participants remain concerned about the possibility of a second wave of the coronavirus. Safe haven currencies, including the US dollar, are extending gain amid such market sentiment. Yet traders are still refraining from the greenback's purchases. The US dollar index is trading within the previous trading range between 97.00 and 97.30. It appears that traders ignored Jerome Powell's offer to Congress to provide more help to small and mid-sized businesses. Today, in the New York session, the weekly data on the number of applications for unemployment benefits in the United States will be on investors' radars. The stock market are more vulnerable to the fears of a second wave of the virus, so the US dollar lost ground amid a decline in the US major stock indexes. Whereas the yen took advantage of the greenback weakness, now the curve is located near 107.00 level. In our previous videos, we discussed the possibility of a downtrend if the dollar-yen pair broke out the level of 107.01. Now we can see that the quote is consolidating near this level. That's why a pair is highly likely to hit the target level of 105.90. Today, there has been a lot of news that affects the Aussie and the Kiwi. Investors evaluated the reports on Australia's labour market and New Zealand GDP. In May, Australia's jobless rate hit the highest level. The figure jumped to 7.1%, logging worse than expected value. The number of unemployed people was also higher than expected. The Australian economy shed 227,700 jobs last month, again missing estimates for a decline of 425,000. What's more, the figure for the reporting period in April was also revised from 594,300 to 607,000. At first, the Australian dollar incurred some losses, but later traders took advantage of the situation and opened long deals of Aussie of a favorable price. Investors factored in the Reserve Bank of Australia's intention to raise interest rates by the end of this year, as well as the fact of quarantine measures were eased only in mid-May. This is why the quote is now rising again. Nevertheless, judging by the technical analysis, the situation is rather ambiguous. Currently, it's recommended to refrain from the opening any new deals. That's all for now. We wish you profitable deals. See you on our channel with a new video in a couple of hours.